morning and welcome. Patriot Radio News Hour. Joe and Jason here on this Thursday. I hope it finds you well out there. It's a great day in the Valley of the Sun. The weather really got nice this week. It's our time to brag, right? You know, this is when, unfortunately, all the snowbirds come, and I get it, but I'm ready for them all to go home. I wish Arizona was close. Maybe can we get a sign like at all the entry points? You know, California, New Mexico, Nevada. Just, hey, we're closed. We're closed. No more people. It's getting too crowded. It's funny. My wife and I were like the other day. It wasn't even 3:00 yet. And there was already traffic backing up on the freeways, and where we live, there's a big outdoor mall kind of where we live. The traffic there, it sucks no matter what time of day it is, and they keep building more stuff, more apartments, more multifamily. Yeah, you know, that's why I get to work so early, just so I don't have to sit in the traffic and frustrate myself. But here's the nice part. If you're sitting in traffic, you can roll the windows down, and it's absolutely beautiful. Of course, give it another, 60 days, and that'll be out of the question. But enjoy it while it lasts. Our toll-free number, 800-951-0592, the website at allamericangold.com. And Jason, we're waiting. We're going to get Fed minutes today. We're going to have NVIDIA is going to release their earnings. Palo Alto, one of the high-flying tech stocks, got crushed today as they lowered guidance dramatically. We'll see what happens. The markets are down right now, waiting for, I guess, more news and what the Fed was thinking in their meeting from a few weeks ago. Going to kind of be interesting what they were saying now that the inflation numbers came out after the meeting, saying things were starting to heat up again. It's going to be interesting what they had to say about interest rates. Would be also if they say anything about the ending of quantitative tightening. And then tomorrow, we'll get it sometime later today. Unfortunately, we'll be off the air, but we'll get it later today, where we'll find out what is going on with the banks. The lending facility was supposed to drop. It didn't. The reverse repo market's falling very quickly. We'll also find out about the discount window and how much more borrowing is happening there. So, Jason, there's a lot of data coming. It's just coming later today.
Yeah, lots of data. There's always lots of data.
We're going to wait for the data.
And it's always lagging. It's always lagging. They can't say what happened up to last week or by Monday. Those numbers are there, essentially. I know some of the numbers you have to gather across the country, but, yeah, the lagging numbers, right, Joe? I was watching a video, Michael Burry. If you are a part of an investment group of a certain size, you have to report all the stuff you've bought and sold in the markets, and but it's 45 days after the quarter's ended. So Michael Burry's in all these positions, buying and selling, and it's most likely by the time you look at what he did 45 days ago, he's probably jumped off because he comes in and out so fast. What does that data really? All that data does is helps you make the wrong decisions. It makes you zig when you should have zagged, and I've seen some stuff about inflation, Joe, that looks so bad coming up. I've seen some stuff that says that we're living in good times compared to what's coming, and it's scary when leading guys are saying, "Hey, yeah, the inflation's been pretty bad, but this is about the end of the good times when it comes to inflation." That's pretty scary stuff because we know in the late 70s, early 80s, things got really, really bad there, Joe.
Yeah, and I think they probably changed the algorithms enough that you won't big numbers of the 70s. I hope, man, because that'll be horribly bad. When you think about, the 1 month where they flashed that 9% number, right? We knew, okay, well, that's 18%. Like right now, it's 3%. The core is 4%. That's probably 6 to 8% in actual inflation. And I agree. I don't think how do I want to say this? I don't know that we're going to get inflation to come down from where it is right now. We may have seen the low water mark here and why do I say that? Because we just keep printing money. I mean, that's really what inflation is. And at the end of the day, when you start looking at all of these things, unless they stop printing money, Jason, it really is something where I don't know how it goes away. And we're expecting, listen, March is right around the corner. It's right around the corner. What is the Federal Reserve going to do? Everybody knows the little bit of money they're taking away, the quantitative tightening, right? That's going to wind out. That's actually going to come to an end. Before this year is over, there will be no more quantitative tightening. Matter of fact, I think the only question will be if they started quantitative easing again, right? I mean, which is just more money printing. So if we're not going to stop printing money, how in the world are we really going to get inflation under control?
Right, and at some point, to save their most precious friends, they will print money and save those guys. So it may not bring a lot of inflation, but that money will get spent at some point and will create more inflation. So quantitative easing means inflation, Joe.
Patriot Radio News Hour. When we return, some big banks making some big bets on where gold is heading. That's coming up next. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Thursday. And quick look in at the markets. The Dow is down about 50 points. The S&P's down. The Nasdaq's down. The 10-year note, as you can probably guess, 10-year notes are higher right now. 429 on the 10-year note. Crude oil up 51 cents is again, right? Crude oil, gasoline prices rising here in the valley. The dollar is mixed. Gold is pretty flat. Silver is down about 20 cents. And again, Jason, I think the year of chaos, as we've dubbed this, we're going to have big swings here. I think there was this lull in waiting for March, right? Because what happens in March? Well, the bank lending facility ends. Now, the facility hasn't grown in the last 3 weeks, but it didn't go down, which it was supposed to. Because remember, this is how the Fed likes to play games with us, right? Oh, there's some banks that are in trouble. See, it's not their fault. And the Fed's actually right about one thing. It's not the bank's fault. They didn't put rates to zero for 15 years, and now all of these things that they bought and are worth less, and they're struggling, and the banks were getting a deal by being in trouble because they could borrow money from the Fed and make money. Well, guess what? That thing exploded, right? It's got $160-some-odd billion in it now. The Fed stopped 3 weeks ago. Okay, no more. You can't make money now if you're going to borrow here. They expected that thing to go down. Of course, it didn't because they all need the money. Now the discount window's rising, but that comes to an end. It looks like the reverse repo. We've been talking about the end of March, and if it's not the end of March, maybe it's the first or second week in April, it's out of money, and this is going to have a very big effect. I think we're going to have to see the Fed stop selling all of their bonds. It'll be interesting. We'll get that number today as well. So the first 2 weeks of February, the Fed didn't do any quantitative easing. So we'll see if that changes. I think it will, but again, there's a lot of the majority of things out there, unfortunately, aren't good, right? We may have hit the proverbial sweet spot already, right? And the markets now, are the markets done going up for the year? I don't know, but I will say this. You need to be more diversifying more than ever. It's the most important thing right now because it looks like, we talked about the leading economic indicators. The longest down streak, 22 consecutive months since Lehman Brothers. The inverted yield curve. It is now the longest streak ever, taking out the financial crisis, taking out the Great Depression, right? We're starting to get used to these signs, these signals of when the bubble's getting ready to pop. And that's why we keep talking about our friends over at YRefi, because you can get up to 10.25% return, and it's not correlated to the stock market. Hey, that part of it, I'm going to get 10.25% on whatever I put in there month after month. It doesn't change. There's no fees. They don't attack your principal if you need to end it early. I mean, it's a great company, and you feel good about it. Check them out. As you know, you got to have $50,000 or more to invest. But invest, YRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. I mean, that's the easiest thing to do. 888 YRefi24. And Jason, it was interesting. Two big banks came out with, I guess we'll call it their upgraded gold forecast. Citigroup and Bank of America raising gold prices. And as far as Citigroup, in an interview with CNBC, this is the head of Citi North America, talking about gold holding this $2,000 level. We talked about that early in January, right? Gold's now comfortable above 2,000, right? All the other times it got there, it stayed there a day, 2 days, right? And then right back down, and it could never stay there. Outside of like a day, right? Gold's been above 2,000 for the last, 6-7 weeks in a row. And Citigroup says, hey, just kind of like what we were talking about. There's not any bullish momentum right now. We kind of hit that dead period, didn't we? We thought inflation, they're talking about inflation going down. March isn't here yet. And so we're waiting to see what's going to happen next as far as how slow is the economy going to go, what's the Fed going to do, what's going to happen with these banks, what happens when the reverse repo runs out. But listen to this. There's a chance gold prices can hit $3,000 an ounce in the next 12 to 18 months, according to Citi. Now, he says, hey, that's my bull case scenario. He goes, and his base case, he goes, it's a little more muted, but he says gold's going to average $2,150 in 2024. And so when you think about, gold right now at $2,025, to average, $2,150, Jason, that probably puts gold somewhere, 23, maybe even 2,400 at the high for the year to get an average of $2,150. And not to be outdone, Bank of America said that they see gold hitting $2,400 this year as well. And it's kind of interesting to see the bigger banks now all of a sudden changing their tune on gold, because, most of them every year they do that. Well, gold's going to be $1,900. If gold's $2,000, it's going to be $1,900. If it's it's going to be $1,800. But very interesting about 3,000 in Citigroup. And what he called this bull case scenario just pointed out the overwhelming demand in gold and in purchases from the central bank and overall gold demand. Here's what really caught my eye, though, because for the last 2 years, central bank gold buying's been all-time record high. 2022 was the record. Last year they were within 40 tons of the record. I mean, they were almost identical. Two huge numbers as far as gold purchases go. But Citi came out and said, hey, not only do we expect that type of demand from central banks to continue, he says, Jason, there's a potential for it to double. That central banks, and I mean, what would have to happen for central banks? They're already buying over 1,000 metric tons a year, but he's talking about in the next 12 to 18 months, all of a sudden they're going to be buying 2,000 metric tons a year. It seems crazy until you look at the debt problem and you start looking at March, and he's, at least in my opinion, he's saying, listen, after March, things may get real ugly.
Well, all you have to do is go back to what I just mentioned in the first segment. When inflation really got bad, which is what I'm hearing, is what I've been seeing, is that it can get way worse than it is now. And 1980 was kind of the zenith. And what happened in 1980 when silver was going to $50 an ounce, and then gold average daily high $614 an ounce. If you look at 1979, it's $307 daily average. In 1981, stayed high, but was lower at $459. So if what they're saying is true, just a gold spot getting to $21.50, Joe, the low premiums that we've been screaming at you guys about the last 4 weeks or so, the low premiums will go back to high premiums. Gold will go up $125 an ounce, and you'll be looking at $20 gold pieces sub $2,500 per coin, maybe $2,450. So once again, you're in this privileged spot if you want to get it for less than 12 months from now, 24 months from now, and when gold really shoots off like a rocket, Joe.
It really is kind of disturbing talking about the doubling of central bank gold purchases and saying it will happen very quickly, right? And again, kind of like we always say, hey, how do you go bankrupt? Well, it's gradual at first, and then it was suddenly. Are we seeing that with gold buying, central bank gold buying? Because you got to remember, they've been buying gold now since like 2005, right? But they started out, hey, we're buying 300 metric tons, 500 metric tons, 600 metric tons. And they bought between 4 and say 800 metric tons for like 15 years. And then all of a sudden it just jumps up to records, right? Over 1,000 metric tons for the last 2 years. And now Citi's saying, hey, don't be shocked if it doubles and doubles quickly to over 2,000 metric tons. And then he said there's another huge factor. He said that this could drive gold prices 50% higher as well. Oh, wait. There's two things that could make it do this. A deep global recession forcing the Federal Reserve to aggressively ease interest rates. Now, we know Japan's in recession. The UK's in recession. Looks like Germany's going in recession. And Jason, it's almost kind of like the clouds just keep coming over. And every quarter, more and more countries enter into this. And I think that the United States, we may be the last one to go in, but it's coming. I think, at least for me anyway, I think that's the baseline scenario, is a deep global recession. The Fed starts quantitative easing again. They start cutting rates again. And to your point, inflation never ends.
Let me go back to that chart one more time and look at before the inflation came in the 1970s. You had gold at 41, 36, 40, 58 in 1972. So it was kind of staying around that 1 ounce price that they had gotten used to while gold is illegal. And then before gold is legal, you have the inflation coming in the 70s, and you got 158, 160, 124. These are the yearly averages. 1977 was 147, 78 is 193, 307. Then, of course, 1980 was blowing up, $614 the average. When it came back down, it was settling kind of in the $360, $400 range. Okay? And then gold became legal to buy again. Congratulations. You couldn't buy it at 50 when the inflation hit.
Right.
It became legal in the 1980s when it settled in the $300 to $450 range. So while the central banks have been buying it up like crazy, and we have this suppressed lower price, they're going to love for you to buy it when it's at $4,000. I think gold goes there and just sits there, or goes up, but it won't matter because all the cheap buying by the biggest players already have been done. We keep telling you people, buy it now because it will blow up. It'll blow up because the economic system is going through a change, a reset. And you buy your gold now, and I don't call it investment. I tell all my customers it's not investment. However, when the economic powers of the world are going to make decisions like they're making and inflating the assets of everything, there's a little bit of an investment type of flair to what's going on because they did it already. When it was illegal to buy it, they took it from $50 to $350, $400. And then they're like, go ahead, buy it now. Because they're going to want to sell it to somebody, right, Joe? That's because they don't like gold.
Right. It's a really important point to remember. You got to know your history. Why did we close the gold window in 1971? Because central bank gold buying had hit records, all-time record highs. And guess what? They're back.
Be darned.
800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Thursday. One of the big questions, especially for the new customers out there, is today a good day to buy it, right? When's a good day to buy it? Right? Now, I always answer it the same way. Listen, God's got a sense of humor, right? If you don't buy today, gold's going up tomorrow, right? And if you buy today, it'll go down tomorrow, right? And the best time to buy it is when you're ready. That's the best time. And knowing history is really important. Jason was telling you, after World War II, it started in the 50s, where central banks, now we weren't allowed to own gold, right? They took the gold from us in 1933, and then they banned it. Right. It was illegal to own gold in America for over 40 years. It was illegal to own it. A lot of people don't know that. But foreign governments, when their treasuries that they were buying matured, they had the option of taking payment in gold. Of course, remember, gold used to be $20 after they took it from us, right? They revalued it at $35. Everybody thought that was wonderful. All these governments in Europe are like, wait a minute. We got all kinds of $20 gold pieces. You didn't take them from us. You didn't melt our $20 gold pieces down. And they had treasury bag after treasury bag after treasury bag full of this stuff. And they were like, wait a minute. Yesterday, I could only buy $20 worth of stuff for this in 1933. Now I can buy $35 worth of stuff. And, of course, remember, this was back when America actually made stuff. And all kinds of gold came back to America. We had 20,000 metric tons of gold that we owned by the end of World War II. And then in the 50s, it's kind of funny, foreign governments were like, you know what, I'm going to roll over some of these treasuries, but I'm going to take some payment. I want some of my gold back. And it started out small. Now, 15 years later, in the late 60s, they were buying 1,000 tons a year. And our supply of 20,000 went to 8. And here was the problem with the 8 that was left. It was all melted down. Right? They didn't have any more of the 20s and the 10s and the 5s that the Europeans had sent back because they melted down all the gold they took from us. So when Richard Nixon closed the gold window in 1971, that was to stop this record purchases of gold from central banks and basically said, nope, all you can do is take dollars. Either buy more treasuries or take dollars. That's all you can do. And why is it important? Because look at what gold did after that. It's happening again now. Right? 15 years of constant gold buying, a little more, a little more, a little more, and then now it's at a record. Here's the difference. See, there is no gold to cut off this time. Right? There's no more closing the gold window to stop them from buying even more. And this is what Citigroup was talking about. He goes, listen, this fiat money, and I'm gonna put some words in his mouth. Hey, the fiat money, it's not looking real good. And it's not just America, it's everywhere. Everybody's got debt, nobody can pay it, there's too much of it. Don't be shocked if central banks start buying 2,000 metric tons. And I'm going to tell you right now, if he's right, and that happens, gold ain't stopping at 3,000. There's not a chance in the world. We just don't have that much gold out there. Right as it sits right now, we're going to have shortages in silver, shortages in gold. Those are just the facts. And the more buying central banks do, the bigger the deficit's going to get. And as Jason keeps saying, buy it now, because when it gets to 3,000 and 4,000, you're just going to be paying huge, huge prices for it because everyone's going to want it. And like I said, we can't just close the gold window anymore. Right? That was the only way they stopped it. And gold, even with closing the gold window, went from $35 to $800. Today's special, because I think the digital currency will come. That'll be the way they try to stop it. Maybe somebody's going to back it with gold. 1 10-ounce American Gold Eagles. Everybody, I will say the most popular trade since COVID, because we've learned a lot about how our government acts in a crisis, is having barterable material. And when it comes to gold, the best barter coin there is the 1 10th-ounce American Gold Eagle. It's because it's easy. It's a 1/10 of an ounce of gold. It's the size of a dime. There's 50 of them that come in a roll. 1 through 49, $250 today. If you want to buy 50 or more, 50 is a whole roll, $245 at 800-951-0592. And Jason, people are starting to call 2024 the year of cost cutting for major businesses, and there's a list that was put out. Here's all the companies so far that have announced cost cutting, which is funny, cost cutting, job cuts. Mattel, PayPal, Cisco, Nike, Estee Lauder, Levi Strauss, Macy's, JetBlue, Spirit Airlines, United Airlines, UPS, Meta, Amazon, Alphabet, Microsoft, Warner Brothers, Disney, Paramount, Comcast, Delta, General Motors, Ford, Stellantis, Chipotle. I'm shocked, Chipotle. They've been adding like crazy. Wells Fargo, Goldman Sachs, Walmart, Target, and now Home Depot. Yeah. Kind of sounds like the dark cloud is getting a little closer. 800-951-0592. Patriot Radio News Hour. Joe and Jason coming right back after the break. Eight 800-951-0592. Joe and Jason here on this Thursday. Big special here on 10th ounce American Gold Eagles. 1 through 49, 2050. 50 or more, 245. Wait, did I get that right? So 250, 1 through 49, 50 or more, $245 a coin at 800-951-0592. And, one of the things interesting, Jason, is when the analyst from Citi was on CNBC talking about this, I was wondering, because they're on the inside. He has information. He has access to information that Jason and I don't, right? I mean, Jason kind of started the show, and you were talking about, by the time they put the information out to us, it's already old. Right? The information's already old. And Jason was talking about that at the beginning of the show. All this data and information that we're waiting for later today, it's already old information. Chances are the guys in the know, whatever they said they were doing, by the time we hear about it, they're probably doing something else. And Jason, that's kind of what stuck in my mind as this guy was talking on TV about gold going to $3,000 an ounce. And, hey, by the way, central bank gold purchasing could shoot up very, very quickly and approach 2,000 metric tons. Obviously, I don't think he's just making a guess here. There's got to be some data that he's seeing that is supporting, the hypothesis that he was making.
Yeah, that's true, and I think when it comes down to it, it really does end up being who physically possesses it. And so when we talk about manipulation, Joe, with that information lag you're talking about, when you buy the physical and you buy the paper, which is what these larger firms do, right. They don't want to buy it for the highest possible prices. So when we had that little one day where it got below $2,000, it makes me wonder how much paper got sold. And when the paper gets sold, you just bought at the higher price, then you get some shakier people. Now it's below 2,000 and sell. And then when it dips, of course these guys are buying, and they're probably buying physical as much as they can because, Joe, I don't think there's enough physical market to keep up with the demand in a lot of ways. They're not mining it fast enough. So I think the paper manipulation of the physical price is sad, because the average guy is not sophisticated enough to keep up with the games that are going on. But at least gold, being a physical asset, there's only so much you can do to it, right, Joe? There's only so much you can do before it does what it's going to do, which is how many dollars versus how many ounces. And the dollars keep on growing, and the ounces slowly grow with all that work and effort by the miners.
Yeah, and I'm wondering, you brought up a good point. Did they see something as gold fell, that one day it got below $2,000, and a lot of people were probably going, okay, here it is again, right? Gold gets up here, but can never stay up here. Did they see massive central bank gold buying? Is that what they saw that says to them, okay, you know what? This thing is going in the other direction, and central banks are ramping up purchases, which is kind of, they've already ramped them up to record highs, and obviously the impression I'm getting from Citigroup is expect a new record high in 2024. And I'm just wondering, because, let's face it, gold was about here, maybe it was 2030, 2040. And then it fell to 2020, then it fell to like 2010, then it broke 2000. I'm wondering in that 3-day stretch if there was just massive physical buying of the metal from these central banks.
Yeah, like I said, you can completely mess up what it looks like by buying the physical and selling more of the paper. You know, it's the one way they've learned to try to manipulate it for their gain, and since they're buying it, then there's a reason for them to sell the paper. It's so that the physical, you know, when it becomes, Joe, I don't pay attention closely. Maybe I should get really deep into it, but these miners and the COMEX, they get these gold bars. I don't know when they hit the market. I don't know if it's like just like the Treasury auction. Okay, it's coming to market. Who's going to buy it? I don't know how that works. But man, if you could sell all your paper, which doesn't represent any ounces, and then buy the physical with it at the lower price, man, that's a great game to play in. You got to have a lot of money for that, Joe.
You know what else is interesting? One of the guys that I tell everybody pay attention to, Stan Druckenmiller, he just sold his Magnificent Seven stocks and took huge positions in the two largest gold miners in the world. That's another probably indication of what's to come.
Yeah, and when it comes to gold, if you use it the way it should be used, which is a storage of wealth, you use it as savings. You really need to look at it long term. If you always wonder, if anyone listening is wondering, I pull up a 100-year gold chart. That's how I get most of my numbers. Those numbers are there. Those lagging numbers are way behind us, but it gives you something to learn from. I mean, if you go to 2015, I mean, the average daily price, 1158, and it just goes 1251, 1260, 1268, 1393, 1773, 1798, 1801, 1943, and this year it's averaging 2029. There's not a down year in there, Joe.
Yeah, on the average price, right? There's
yes.
Not a down year in there. Patriot Radio News Hour. We got one phone line open. 10-ounce gold eagles, 1 through 49, 250, 50 or more, 245. Jason and I wrapping it up when we return. (800-951-0592) Patriot Radio News Hour, wrapping up this Thursday edition. We will get to you in the order that you called. If you get the voicemail, you can leave a message or call us back here. 10th ounce American Gold Eagles, 1 through 49 at $250. If you buy 50 or more, $245. As we're waiting, we're going to get Fed minutes today. We're going to hear from Nvidia, one of the Magnificent Seven, today as well. And as we're waiting on all of this data today, we're talking about Citigroup and Bank of America dramatically increasing their gold forecast. Citigroup saying the bull case, which I would say, okay, hey, this is, I'll say this, what I would say, worst case scenario, right, for the paper guys, we're going to see gold at $3,000. And you're going to see central bank gold demand surpass 2,000 metric tons. So to me, Jason, it looks like no matter what happens, we're probably going to see a new record high in central bank gold demand. And even Bank of America says, hey, we see gold hitting $2,400 this year. And Citigroup said a worst case scenario, gold will average $2,150, which means, gosh, it would have to, the second half of the year, it'd probably have to be $2,300 or $2,400 to average, because you said right now, gold for the year, the average is 2,029. Right? So you got to, just to get to 2150, right? Well, you're going to have to add almost another 125. It's like 2275, 2300. And my guess is we'll probably see maybe Bank of America, maybe they got it right. Hey, are we going to see $2,400 gold? And if things don't go well, are we going to see $3,000 an ounce? And are we going to see even more central banks ducking for cover and trying to find an alternative to the fiat that's out there?
Yeah, and nothing better than buying gold, Joe, to keep you from the fiat devaluation of whatever account it's sitting in or whatever little box or hiding place you got your cash. I understand having cash for emergency purposes and sitting there when you need it, but yeah, Joe, this is why we sell gold and silver. Those 10,000 gold eagles, what a great way for those that have a lot of money to put into gold and silver today, or those that just have a little bit. It's you buy a roll, and a lot of people that are listening can't buy the roll, but you buy a 50 coin roll of those 10,000. That's a great little 5-ounce roll of gold that you could break into pieces. It's like a 5-ounce gold piece in a tube that you can break into however you wish. And then for the average guy out there, Joe, $245. You get a 10,000 gold eagle. Yeah, it's a higher premium, but we also pay more for those when they sell to us. That's just the way it works.
Yeah, so 1 through 49, 250. You buy 50 or more, 245. By the way, if you bought the roll, $12,250 for the roll. And obviously you can buy multiple rolls if you like. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping it up on this Thursday. But we're coming right back with the half hour. Actually, I've been saying Thursday all day. It's only Wednesday. Man, I'm upset now. I just realized that.